Differences between physical resources, human resources, and financial resources. Physical resources versus human resources versus financial resources. Physical resources are tangible, material assets that organizations and people use to operate, create goods and services, and achieve their goals. Whereas, human resources refers to the department responsible for managing people within organizations, encompassing activities such as selection, training, appraisal, and rewards, while also playing a strategic role in identifying and developing the skills necessary for organizational success. Whereas, financial resources are the money and other monetary assets available to an individual or organization to fund operations, investments, and growth. These funds can come from various sources, such as profits, investments, or loans, and are essential for meeting obligations and achieving goals. The primary aim of physical resources is to enable an organization to achieve its strategic objectives by facilitating operations, enhancing productivity, and delivering value to customers. Whereas, the aim of human resources is to effectively manage an organization's workforce to maximize both employee and organizational performance, ensuring a productive, compliant, and engaged work environment. Whereas, the primary aim of financial resources is to achieve financial goals and ensure the long-term stability, growth, and profitability of an organization or individual by enabling funding for operations, strategic projects, and investments while managing risks and optimizing resource utilization. Effective financial management uses these resources to meet financial objectives like profitability, liquidity, and wealth maximization. Examples of physical resources include buildings, machinery, equipment, land, materials, natural resources like sunlight and water, and even technology such as computers and software. They are crucial for daily functions and long-term objectives, requiring effective management to ensure operational efficiency and competitive advantage. Whereas, examples of human resources are males and females that needs recruitment and onboarding, employee training and development, performance management, compensation and benefits, employee relations, workplace safety and health, and ensuring legal compliance within the organization. These activities cover the entire employee life cycle, from hiring to their eventual departure, and aim to create a positive and productive work environment. Whereas, there are two types of financial resources such as internal financial resources and external financial resources. Examples of internal financial resources include profits generated by the business, retained earnings, capital funding, and liquid assets, whereas examples of external financial resources include loans and credit from external sources, such as banks. Physical resources involves utilizing tangible assets like equipment, buildings, and technology to efficiently produce goods and services, improve the customer experience, and maintain a competitive edge in market. Whereas, human resources involves in attracting and retaining talent, developing employees, managing compensation, promoting a healthy and safe workplace, fostering a positive company culture, and ensuring legal compliance. Whereas, financial resources are involved in using a number of ways, but they typically cover the cost of doing business and turning a profit, also known as corporate finance. In short, physical resources are the tangible assets that businesses and organizations use to support operations, produce goods, and deliver services. Whereas, human resources is the function within an organization responsible for managing employees throughout their life cycle, from recruitment and hiring to development, compensation, and termination. HR departments focus on attracting and retaining a qualified workforce, ensuring legal compliance, fostering a positive work environment, and supporting overall business goals by optimizing human capital. Whereas, financial resources are the funds and assets that finance an organization's activities and investments. They include tangible assets like cash, real estate, and investments, as well as intangible resources such as credit lines and insurance. Effective management of these resources involves careful planning, allocation, and monitoring to ensure financial stability, growth, and the ability to meet obligations and seize opportunities. Kindly subscribe my YouTube channel Thesis Helper. Thanks for watching.